from Revati. What is the present value of this 1100 rupees? What about others? Present value is 1000 from Darshini. What about others? 1000. Kavita. After 1 year, the value is 1100. What is the present value? What about others? Present value is 1000. What about others? 1100 only. 1100 is the after 1 year value. The present value becomes 1000 rupees. Present value of 1100 is 1000 rupees. Then what about 1210? After 2 years, I have 1210. After 2 years, I have 1210. Discount rate is 10%. What is the present value? What is the present value? After 2 years, I have 1210. What is the present value? 1:1000. Now tell me for 2 years category. After 2 years, I have 1210. What is the present value? Please tell me. After 2 years, I have 1210. What is the present value? 2 years later, I have 1210. From Revati, 1000 rupees. What about others? What about others? Kavita, 1000 rupees. What about others? What about others? What about others? Present value is 1000, sir, even after 2 years. From Darshini. From Preeti, 1100. After 2 years, I have 1210. I'm in the 0 year now. I'm in the today. Today. What is the value? Today, what is the value? 1:1000. How to identify that? How to identify that? First, for example, 0, 1, 2. Actually, this is the financial management topic. If you would have already studied in financial management, then it will be easy. So after 1 year, I have 1100. After 2 years, I have 1210. What is the present value? For first year, what to do? 10% is the discount rate. 10% is the inflation rate. First year, what to do? 1100 divided by 1.1. 1100 divided by 1.1 equal to 1000 rupees. This is how we have to discount. Then second year, what we have to do? Second year, what we have to do? 1100 divided by 1.1 whole square. 1.1 whole square equal to how much? 1210 divided by 1.1 means nothing but interest rate. Interest rate is 10%, so I am making 1.1. Interest rate is 10% means 10 divided by 100 equal to 0.1. 0.1 plus 1 we have to add. Okay, then 1.1 will come. So 1.1 whole square. 1.1 into 1.1 how much? 1.1 equal to into 1.1 how much? 1.1 into 1.1 how much? 1.1 into 1.1 how much? Please put your 1.21. So 1.21, then 1210 divided by 1.21 equal to 1210 divided by 1.21 equal to, again, what is the value of the present year? 1000 rupees. Again, the value becomes 1000 rupees. So this is what present value. This is what present value. Understood up to this? Understood up to this? Shall we continue further? This is one of the important topic for the financial management. This is one of the important topic for the financial management in the inter final level, you will get lot of problems related to present value. For accounts, it does not have much significance. For other topics, financial management or strategic financial management, final level or valuations, all these topics very very important. Shall we proceed further? So why I am discussing this point? Why I am discussing this point? I am discussing because formula. If you go through the formula, we have to identify two things. We have to identify two things. Lower of two things. We have to identify the two things. One is fair value we have to identify. Another one is present value we have to identify. One is fair value we have to identify. Another one is present value we have to identify. So for identifying the present value only, I explained this much. Because lower of these two becomes the opening balance of assets and liability. Lower of these two becomes the opening balance of assets and liabilities in the books of lessee in case of finance lease. For that reason only I am explaining this much. Then what to do, sir? What is the next step, sir? Next step, sir. Next step, what to do? What we will do is we will work out a problem. We will work out a small problem based on this topic. Okay? We will work out a small problem based on this topic. Go through this question first. Illustration 22. Illustration 22. This Millen Softex Limited has taken the assets. Please go through this question. Please go through this question. We will work out. I'll take 5 minutes break. I'll meet you after 5 minutes. Okay? Please go through this question. The particular lease is finance lease or operating lease. Without going through the answer, you should able to think what type of lease it might be, whether it is a finance lease or operating lease. That is the first step you have to do it. Tell me whether this particular lease is a finance lease or operating lease as per you. Don't look at the answer. By going through the question alone, you tell me. You just tell me whether this is a finance lease or operating lease. What type of lease it is. Are you there? Finance lease from Kamita. Revati finance lease. Kirti finance lease. Preeti finance lease, because the payment amount is more than the actual cost of the asset. Okay. What about others? What about others? Swati finance lease. Padmavati finance lease. What about others? What about others? For finances, what are the things we have to think? One, we have to check the life of the asset, lease period, and the price of the asset, lease payment, and after the life of the asset, who is going to own the asset. All these things we have to test for that particular transaction. So in this problem, lease term equal to 4 years. Fair value of the asset is 16 lakhs. Lease rent is 5 lakh per annum. Guaranteed residual value is 1 lakh. Guaranteed residual value means what? Guaranteed residual value means guarantee given by lessee to lessor. What guarantee? After the lease period, I itself purchase this asset from the lessor. What is the value of that lease guarantee residual value? 1 lakh. And the rate of interest is 14.97. So we have to decide this, whether this is a finance lease or not. We have to decide by doing some workings. We have to decide, not simply going through the question. We have to do some workings also. What type of workings? As I said, so lease period, 4 years. 4 years. Life not given in the question. Life is not given in the question. Life of the asset is not given in the question. Then price, that is fair value, is given in the question. That is 16 lakhs. Then lease payment, 5 lakh per annum, into 4 years, because lease period is 4 years, equal to 20 lakhs is the total payment. Then guaranteed residual value, 1 lakh rupees. Guaranteed means guarantee given by lessee to lessor. Lessee is giving, he will ready to pay this 1 lakh rupees after 4 years. Expected means total residual value, expected by lessor, but guaranteed by lessee is only 1 lakh. Total residual value is 2 lakh. Expected by the lessor, but out of 2 lakh, 1 lakh is only guaranteed by lessee. Rate of interest, 14.97%. This is the question. So first thing we have to check is test. Say for example, you can say test life and life of asset lease period comparison. Life of asset lease period comparison not available because lease period only available, life of asset not available, so we can't do test. Another one is price, fair value and the lease present value of lease payment, that we have to identify. Fair value is 16 lakhs and total lease payment is 20 lakhs. Now tell me whether the lessee is paying more or less compared with the fair value. Just type more or less. More or it is less. How much he is paying lessee to lessor? Whether he is paying more than the price of the asset or less than the price of the asset. More or less. Just put Preeti more. What about others? What about others? More from Revati. Vijay, less. More than the fair value of 4 lakhs. Where is 4 lakhs? It is 16 lakh only, no? Oh, you are saying more than the fair value of. Okay, understood. From Darshini, more than fair value. Yes, more. Okay. Okay, but now my question is whether this 20 lakhs, is the discounted value or not a discounted value? 20 lakhs is a discounted value or not a discounted value? 20 lakh is a discounted value or not a discounted value? Inflation adjusted value or not an inflation adjusted value? I am asking 20 lakhs is a after discounted value, sir. Inflation is also adjusted for this 20 lakhs. Yes or no? Adjusted means yes. Not adjusted means no. 20 lakhs is an inflation adjusted value, sir. Yes, sir. It is 20 lakhs is already inflation adjusted. Yes, sir. Means it is adjusted. Inflation is already adjusted in 20 lakhs. That's what Kavita. From Kavita it says. What about others? Darshini, yes, sir. Yes, sir. Vijay, no. Swati, yes. What about others? 20 lakhs is an inflation adjusted value, sir. From Honestly, yes, sir. Then what about others? What about others? What about others? How we are receiving the 20 lakhs? How we are receiving this 20 lakhs? How we are receiving this 20 lakhs? When we are receiving at the year end or year beginning? At the end of the year only we are receiving. That means first year end. First year end we are receiving 5 lakhs. Second year end we are receiving 5 lakhs. Third year end we are receiving 5 lakhs. Fourth year end we are receiving 5 lakhs. That owner will receive 5 lakhs. Now tell me, totally we are receiving 5 lakhs plus guaranteed residual value. Only we have to consider in the books of lessee. Guaranteed residual value only we have to consider in the books of lessee. Present value of minimum lease payment. This is called what? Present value of minimum lease payment in the books of lessee. In the books of lessee. How much we are receiving? 1 lakh rupees, because that is the only guarantee given by the lessee. Not 2 lakh. He is not giving a guarantee for 2 lakh. He is giving only 1 lakh guarantee. Now tell me, all of you put yes na. Second year 5 lakh is received. Third year 5 lakh received. Fourth year 5 lakh received. 5 lakh received plus 1 lakh. Totally 21 lakh. Totally how much? 21 lakh will be paid by lessee to lessor. Okay. This 21 lakh is a discounted or not discounted one? This 21 lakh is discounted to present value or not discounted to present value? Not discounted from Vijay. What about others? What about others? Discounted means what? We have to bring the present value for the future value. Okay? Discounted from Vanishti. What about others? Not discounted, not discounted from Pavanchan, Kavita. What about others? Not discounted. Because after 2 years I am going to pay 5 lakh. After 2 years I am going to pay 5 lakh. After 3 years I am going to pay 5 lakh. After 4 years I am going to pay 5 lakh plus residual value guaranteed. Resi is given guarantee for residual 1 lakh. This after 4 years I am going to pay. If I am going to pay after 2 years, after 3 years, after 4 years, means what is the present value for that after 2 years, 3 years, 4 years? That we have to identify. Got it? After first year end, I am going to pay 5 lakh. First year end, I am going to pay 5 lakh. Future value. After 1 year, 5 lakh. What is the present value? Discount rate. Present value. Then after 2 years, I am going to pay 5 lakh. Future value. What is the present value? Discount rate. You will have to get it. After 3 years, I am going to pay 5 lakh. Apply discount rate. You will get present value. After 4 years, I am going to pay 5 lakh plus 1 lakh. Because I also given guarantee of 1 lakh residual value. I will pay 1 lakh rupees residual and I will purchase that asset. Okay? So this is the thing. This is the future value. I have to get the present value. How to get that? How to get that? Interest rate is given in the question. Inflation rate. Interest rate means assuming that is an inflation rate. 14.97% equal to 14.97 divided by 100 equal to how much? 14.97 equal to divided by 100 equal to 0.1497. 0.1497 plus 1 equal to 0.1497 plus 1 equal to 1.1497. Okay? So what I should do? After 1 year I am having 1 rupees means if I discount by 1.1497, then I will get the present value. 1 divided by 1.1497 how much? 1 divided by 1.1497 how much? Put a message. 1 divided by 1.1497 how much? 1 divided by 1.1497. What is the thing? 1 divided by 1.1497. All of you should have the calculator. You have to work out this in your calculator. You have to work out this in your calculator. That's what very important. You have to practice. 0.8698 in vechikalam. So this is the discount rate. So what I should do is 5 lakh into 0.8698. 5 lakh into 0.8698 how much? 5 lakh into 0.8698 how much? 5 lakh into 0.8698 how much? Please tell me. 4,34,900. So meaning is after 1 year if I have 5 lakh rupees in my hand, that I have an equivalent value of today worth of 4,34,900. Meaning if I have today 4,34,900, then after 1 year that equals to 5 lakh rupees. If I have today 4,34,900 means that is equivalent to 5 lakh after 1 year. Okay? So 4,34,900 into 14.97%. 4,34,900 into 14.97% how much? 4 lakh 34,900 into 14.97 percentage, how much? 4 lakh 34,900 into 14.97 percentage, how much? Approximately tell me. Please message me. 4 lakh 34,900 into 14.97 percentage, how much? 65,105. Or else I can make it 6,500. Okay? For rounding up purpose, I will make it 6,500. So 4 lakh 34,900 plus 6,500 equal to 5 lakh rupees. That is what we are doing. I am just converting from the present value to future value. We did here reverse way discounted. We discounted from the future value to present value. If you multiply with this figure into 14.97, you will get 5 lakh rupees. That is the future value. Okay? Now do it for the second year. Now do it for the second year. Now do it for the second year. Then third year. Then fourth year. So 5 lakh plus 1 lakh rupees. I will work out for the second year. I will work out for the second year also. What I should do? Again, 1 divided by 1.1497 whole square. Okay? Equal to something will come. Again, third year, 1 divided by 1.1497 whole cube. Again, 1 divided by 1.1497 whole 4 quadruplicate. Okay? So, what is the answer you are getting for the second year? What is the answer you are getting for third year? What is the answer you are getting for second year? What is the answer you are getting for third year? 1 divided by 1.497 whole square is how much? 1 divided by 1.1497 whole square is how much? Keep your calculator. Don't use your mobile as a calculator. Keep calculator separately. Keep one calculator separately. You should get the practice by having the calculator. Don't do it in your mobile. Please don't do it in your mobile. 1.32181. How it is? 1 divided by 1.1497 whole square is 1.32181. 1.32181. 1 divided by 1.32181, how much? All of you other 0.7653. 0.7653. What about 7565? Yeah. 0.7565. Okay, I will take the institute answer. 0.7565. What about the third one? If I do it by third one, what about the third one? What are the third years? 0.6580. If you have the standard citizen calculator, you can easily do it. Just apply equal to equal to equal to, you will get it. What about the fourth one? Fourth year, 0.5724. 0.5724. So what I should do now? What I should do? 5 lakh into 0.7565 is how much? 5 lakh into 0.7565 is how much? 5 lakh 0.7565, 3 lakh 78,250. 3 lakh 78, 3 lakh 78, 3 lakh 78, 250. 3 lakh 29,000. 3,29,000. 3,43,440. Why? Because 5 lakh plus 1 lakh, 6 lakh into 0.5724. 6 lakh into 0.5724. So if I add all these things, how much I am getting? 14 lakh 85,590. 14 lakh 85,590 only I am getting. Guys, up to 14 lakh 85,590 understood? Up to 14 lakh 85,590 understood? Please let me know, up to 14 lakh 85,590 understood? Doubt? When we sell the assets, get the residual value and it is our income. Here why we are adding residual value to the lease payments? It is not about income. It is about how much we are spending. We are purchasing the asset. Like that, for that how much we are ready to pay the asset. For that how much we are ready to pay. Payments, total payment from our side. That we have to recognize as an asset. That is why we are adding in the books of lessee. It's not, and we are in the books of lessee. We are not in the books of lessor. We are in the opposite side. So 14 lakh 85,590. 14 lakh 85,590. Now you have to compare. Now you have to compare price versus present value of lease payment. Present value of minimum lease payment. This is called present value of minimum lease payment. This is called present value of minimum lease payment. What is it called? This 14 lakh 85,590 is called present value of minimum lease payment. This present value of minimum lease payment includes lease payments over the period. Okay? And also guaranteed residual value. Okay? That is what we calculated now. That should be discounted with the present value. Now tell me, price is 16 lakh versus actual discounted payment is 14 lakh 85,590. 14 lakh 85,590. Meaning today the worth of the asset is 16 lakhs. And today the worth of the payment which I am going to receive is only 14 lakh 85,590. You can ask me, sir, worth of asset is 16 lakh, but we are paying only 14 lakh 85,590, which is less than the price of the asset. But you have to think, you have to check the majority portion. Majority means what? Proportion. 14 lakh 85,590 divided by 16 lakh into 100 equal to how much? 1485 divided by 1,600 is how much? 80% or more, or 90% or more? How much percentage it is? How much percentage? 1485,590 divided by 16 lakhs. How much? How much percentage you are getting? 92.8 percentage from C. 92.8 percentage, which is reasonably adequately we are recovering from our lessee. That means the lessee is paying the major portion of the asset value, and also he is going to purchase guaranteed. He is giving guarantee after 4 years. Meaning he is going to be owner after 4 years. By considering these factors, we have to conclude this transaction is in the nature of finance lease. This transaction is nature of finance lease. Why? Because majority 92.8% is recovered, and also lessee is given guarantee to buy this asset after the life of the asset, after the lease period. Because of this reason, I am classifying this transaction as a finance lease. Okay? Then only you have to proceed the answer. This is finance lease. Yes, this is finance lease. What we have to proceed, sir? We have to account. We have to account in the books of lessee. How to account, sir? We have to account asset and liability. Asset and liability first. How to account, sir? Which value we have to put? We have to put lower of fair value and present value of lease payments. Okay? What is fair value, sir? Fair value equal to 16 lakh. What is present value of minimum lease payment? What is present value of minimum lease payment, sir? 14 lakh 85 590 is the present value of minimum lease payment. Correct? 14 lakh 85 590 only. Yes. So 14 lakh 85 590. What is the lower? 16 lakh is lower or 14 lakh 85 590 is lower? 14 lakh 85 590 is the lower. So this is my value for balance sheet, initial balance sheet. Initial balance sheet. Initial balance sheet means opening balance. You can say opening balance. Liabilities, assets. This is my value of asset. Asset value is 14 lakh 85 590. Liability value is 14 lakh 85 590. Opening balance. Opening balance. Then what is the next step, sir? What is the next step, sir? Next step is, as I said, every year we have to account in P&L account and balance sheet. We have to account P&L account in balance sheet. What to account? What to account? Because this is asset, we have to provide depreciation. We have to calculate depreciation. This is liability. We have to pay EMI. EMI includes two things. One is principal. Another one is interest. We have to identify and we have to deduct the principal amount and we have to arrive closing balance. We have to deduct the depreciation and we have to arrive the closing balance. And what we have to do in P&L? And what we have to do in P&L? P&L, since we are claiming depreciation, we have to account the P&L as an expense, depreciation expenses. Since we are paying EMI, interest also we are paying. So we have to identify. We have to debit the interest expenses also. Now the next question is, sir, how to identify this depreciation? How to identify this interest? How to identify this principal repayment? For that we have to do some workings. For that we have to do some workings. What workings we have to do? What workings we have to do? We have to identify the depreciation. That is simple. We can easily identify. What about principal and what about principal repayment and interest, sir? For that we have to do workings. For that we have to do workings. For that what we have to do? Liability. Opening opening balance. Then EMI. EMI is nothing but lease rent. EMI is nothing but lease rent. Then interest portion. Then principal portion. Then liability closing balance. Liability closing balance. So then liability opening balance before year. Year. Year 1, 2, 3, 4. 1, 2, 3, 4. What is the opening balance? What is the opening balance we identified in the balance sheet? What is the opening balance we identified in the balance sheet for liabilities and assets? What is the opening balance we identified? This is the opening balance we identified. 14 lakh 85 590. So this is what I am going to write here. 14 lakh 85 590. This is my opening balance. First year lease rent, how much is paid? First year lease rent is how much is paid? First year lease rent is how much? As per the question, how much we are paying? First year lease rent, 5 lakh. 5 lakh is the total lease rent. It is like an EMI amount, which includes interest and principal. Which includes interest and principal. We have to identify that. How to identify that? How to identify that? What is the rate of interest? What is the rate of interest? Rate of interest is how much? 14.97 percentage. 14.97 percentage is the rate of interest. So what I should do is 14 lakh 85,590. 14 lakh 85,590 into 14.97 percentage. 14 lakh 85,590. 14 lakh 85,590 into 14.97 percentage, how much? 222 393. That is my interest portion. 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 Then what about principal? Principal is nothing but EMI, lease amount minus interest amount. What is my lease amount? Total amount. 5 lakh is my total thing. 5 lakh is my total lease rent minus interest. Minus interest. Interest you can call it as a finance charge also. Finance charge, interest, everything is in same. Interest 5 lakh minus 2239 equal to 277,607. How it is arrived? 5 lakh minus 2239 equal to 222,393 equal to 277,607. Then what will be the liability closing balance? My opening balance of liability is how much? 14,85,590. Now tell me, liability minus EMI equal to closing balance, or liability minus interest equal to closing balance, or liability minus principal repayment. This is called principal repayment equal to my closing balance. What I am asking is, liability minus EMI equal to my closing liability, or liability minus interest equal to my closing balance, or liability minus principal equal to closing balance. As per you, which one is correct? Liability minus principal by Revati. From C, liability minus principal. What about others? What about others? Don't look at the institute answer. Think yourself and let me know. Liability minus principal. Liability minus principal. Correct. From Bhupati. What about others? Yes. While deducting the loan amount from our liability, we should deduct only principal. Interest is an expenses. Interest is an expenses. It should be debited to P&L account. It should not be deducted from the loan amount. Interest is a recurring expenditure. It is an operating expenditure, revenue expenditure. We have to debit the P&L amount. Only the principal repayment, actual loan amount should be reduced from the liability account. So 14 lakh 85 minus 85,590 minus principal. Liability of opening balance minus principal equal to closing balance how much? Closing balance how much? 14 lakh 85,590. 14 lakh 85,590 minus 14 lakh 85 590. So 14 lakh 85 590, then it becomes around 12,07,983. Then my first year closing balance will be opening balance for the next year. First year closing balance will be the opening balance for the next year. What is my next year opening balance? 1207 1207 983 is my uh, opening balance. So again I am paying second year 5 lakh rupees EMI. 5 lakh rupees EMI. So again I have to calculate 12 lakh 7,983. 12 lakh 7,983 into 14.97 percentage. 12 lakh 7,983 into 14.97 percentage equal to how much? 12 lakh 7,983 into 14.97 percentage into equal to how much? 1 lakh 8835. 1 lakh 8835 is my interest. Is my interest. So EMI is lease rent is 5 lakh minus interest equal to balance is my principal repayment. Out of 5 lakh rupees I am paying 1 lakh 8835 is my interest, balance is principal amount. What is that amount? 5 lakh minus 1 lakh 80,835 is 319,615 is my principal repayment. 319,615 is my principal repayment. So again I have to arrive the closing balance. How to arrive my closing balance? How to arrive my closing balance? How to arrive my closing balance? Opening liability minus principal for the present year equal to closing balance. Opening liability 12,07,983 minus 319,615 equal to something around 18. 888818 is my closing balance. Up to this understood. First year, second year understood. First year, second year understood. Shall I proceed to the third year? Shall I proceed to the third year? Shall I proceed to the third year? Yes, sir. From Kavita, Suvanya, yes. Shall I proceed to the third year? Understood. Understood. Okay, I'll proceed. 888818 is the opening balance, and 5 lakh is my lease payment. And what is the interest? 8888 into 18 into 14.94 percentage. 133056 is the interest. Total payment is 5 lakh minus 133056 equal to how much? 133056 equal to principal is how much? Principal is how much? 5 lakh minus 133056. Principal is how much? What is the principal amount? Use your calculator. 366,944. Then what is my liability? Closing balance liability. Opening liability minus principal. Opening liability minus principal for the percentage equal to closing balance. 521874. 521874. So 521874 is the opening balance for the fourth year. Now tell me for EMI, for fourth year EMI, what amount I should write? 5 lakh I should write, or 1 lakh I should write, or 6 lakh I should write? 5, 1 or 6, which one I should write? How much is paid by lessee to lessor? 6 lakh by Kavita. What about others? What about others? 6 lakh from Suganya. What about others? 6 lakh from Nisha. What about others? Who will be 6 lakh? What about others? Why 6 lakh? Because 5 lakh is the lease rent plus 1 lakh is the guaranteed residual value by lessee. What is lessee guarantee? What is that lessee fellow is guaranteed? That only you will take it. That one only we have to take it. Not 2 lakh. Because we are in the books of lessee, not in the books of lessor. So 5 plus 1, 5 plus 1 equal to 6 lakhs. 5 plus 1 equal to 6 lakhs. So now tell me interest. 5,21,000 into 21,874 into 14.97 percentage. How much? 5,21,874 into 14.97 percentage. How much? 78,125 is the interest portion. Then what about principal? 6 lakhs minus 6 lakhs minus 78,125 is how much? 521,875. Then opening liability is 521,875, 82874. Closing liability, principal repayment is 521,875. So it is around 1 rupees difference. You can make it 0, not a problem. Nil. You can make it ultimately nil. Okay. This is the workings actually. This is not the ultimate. This is the mostly in examination. This will be the ultimate answer, but this is part of working. Why we are doing this working is we have to identify interest amount. We have to identify the principal amount. That is the reason why we are doing this workings. That is the reason why we are doing this workings. So what we should do, why we did this working is, we have to work out in our balance sheet and P&L every year. What we have to work out? What we have to work out? Balance sheet. What we have to work out? First year. First year. What is this? Liabilities, assets. Second year. Third year. That is why we are doing this working. Fourth year, what we have to do? That is why we are doing this workings. What is the first year thing? What is the opening balance? What is opening balance? Opening balance is how much? 1485. 590 is my opening balance. Liability side. Asset side opening balance how much? 1485, 590 is opening balance. What we have to do? Every year we have to provide depreciation. Every year we have to deduct the principal repayment. Principal repayment, identify. Depreciation, we have to identify. How to identify? Lease period. Life of the asset is not given. Lease period is the life of the asset. Lease period, 4 years. Straight line method, we have to simply apply. Question is silent, we have to apply straight line method. So 1485, 590 divided by 4. 1485, 590 divided by 4 is how much? 1485, 590 divided by 4 is how much? Lease period. 1485, 590 divided by 4 is how much? Please tell me, anybody? 1485, 590 divided by 4. Depreciation, why 4? Because life of the asset is 4 years. Lease period is given, that we have to take it as a life of asset. Because after 4 years, it is purchased by the lessee itself. 371 397.5. Then we have to identify the closing balance. Closing balance for the first year. Here, principal repayment, what we have to do? Opening balance 1485,590. First year repayment, how much? Principal repayment. We identified in the workings. We identified in the workings. We identified in the workings. How much we identified first year? First year, how much we identified here? Principal repayment 277,607. Second year, how much we identified? 319,615. So 277,607 is my first year principal repayment. Okay, then closing balance is how much? Closing balance also we identified here. Closing balance also we identified. 1207 983. 1207 983 is my closing balance. So first year over. First year is over, then come to P&L account. Come to P&L account. First year P&L, what we have to do? First year P&L, what we have to do? We have to debit the depreciation, we have to debit the rest of the years yourself. You do it for the rest of 780. Okay? Round it off. 371,398. Interest how much? First year, how much we identified interest amount? Interest amount, how much we identified first year? We identified 22,393. We identified 22,393. That is my expenses. 22,393. So 22,393. Like this, every year I have to do it. So what I suggest is you do it for the rest of the year. You do it for the rest of the years yourself. You do it for the rest of the years yourself. And what I recommend is all of you please work out this problem in your notebook. All of you please work out this problem in your own notebook. So with this, I am just closing the today's session. Finance lease. So before getting into the problem, we should know some basic definitions. Basic definitions for working out the problem. We should know some basic definitions. So minimum lease payment, that is what we discussed in previous class. Minimum lease payments in the books of lessee. In the books of lessee, minimum lease payment means in the books of lessee. In the books of lessee, minimum lease payment means whatever the lease amount paid by the lessee to lessor. Lessee to lessor plus any guaranteed residual value. Guaranteed residual value means guarantee given by the lessee to lessor. After the duration of lease period, that lessee itself guaranteeing to the lessor that I will buy this asset for this scrap value, this residual value amount. That is the guarantee given by lessee to lessor. So minimum lease payment in the books of lessor means what? Whatever the lease payment made by lessee plus whatever lease payment made by the lessee plus any guaranteed residual value. That is what minimum lease payment for lessee. So I am writing that here. So MLP, books of lessee. MLP means MLP equal to lease payments plus guaranteed residual value. Lease payment plus guaranteed residual value. This is for in the books of lessee. The books of lessee. Lease payment, you know that lessee is paying recurring basis, and it does not include contingent rent. Contingent rent means may or may not be payable by lessee. Lessee will pay that rent, lease rent only after satisfying many conditions. That is contingency. Contingency means uncertainty. So that rent should not be counted for this lease payments. Okay? Assured rent only will be counted for lease payment. This is for in the books of lessee. This is for in the books of lessee. Then books of lessor. Books of lessor means what? That the actual legal owner. Legal owner, what is the lease payment? MLP means what? MLP means in the books of lessor, again the same lease payment. Lease payment means lease payment received from lessee. That he is receiving the lease from the lessee plus guaranteed residual value. Guaranteed residual means who is giving this guarantee? Guarantee given by lessee to lessor. Plus additionally one thing we have to consider here. Unguaranteed residual value. Unguaranteed residual value means apart from lessee there is some third party. Third party is also offering. Third party also giving some assurance that I will also purchase this residual value for so and so amount. So unguaranteed residual value. That is unguaranteed residual value. That is also considered as an MLP, part of MLP. That is the difference between MLP versus lessee and MLP versus lessor. MLP versus lessee is only lease payment plus guaranteed residual value. MLP means minimum lease payment. MLP in case of lessor, it is lease payment plus guaranteed residual value plus unguaranteed residual value. That is the difference between MLP in the books of lessee versus in the books of lessor. Why we are studying this? This is for arriving the figures. In previous class we discussed initial recognition in the books of lessee in case of finance lease. What we discussed in previous class? Lower of previous class what we discussed actually. Previous class we discussed in the books of finance lease, lessee should recognize assets and liability. Assets and liability in between these two things, comparing between the two things. One is first bullet point, just refer. The amount will be lower of fair value of lease and present value of minimum lease payment. This is what we discussed in previous class. Now we are going to discuss about in the books of lessor. So in the books of lessor, MLP means additionally we have to consider the refer the second para. In the books of lessor, MLP which includes two things. One is in case of lessor, any residual value guaranteed to the lessor by or on behalf of the lessee or by an independent third party, that is called unguaranteed residual value. Why we are discussing that you will come to know while solving the problem. So this is what required in the books of. This is what the definition for in the books of lessor in case of MLP. This is one step. Next step is this accounting in the books of lessee in case of finance lease we covered in previous class. Now we are going to discuss accounting treatment for leases in the books of lessor in case of finance lease. Previous class we covered in the books of lessee in case of finance lease. In this class we are going to cover in the books of lessor in case of finance lease. So under that first point is lessor should recognize assets given under a finance lease in the balance sheet as a receivable at an amount equal to net investment in the lease. So how it is presented in the balance sheet? It is not an asset. That is what we said initially. That is what we discussed initially. In finance lease, substance over legal form. Substance over legal form. Practically, the lessee is the owner, so that a particular item will be treated as an asset in the books of the accounts, in the books of lessee, not in the lessor. So, in the books of lessor, it is treated as an receivables, not an asset. He will not claim depreciation. Lessor will not claim depreciation. Lessor will treat that amount as a receivable in the asset side. Okay, so this is what the thing in the books of lessor. In case of finance lease, the same amount is treated as an receivables, not an asset. Even though he is legally owner, that he will not claim depreciation, he will not treat that asset as a fixed asset, rather he will treat it as an receivable in the books of lessor. How that receivable is arrived? How that receivable is arrived? That receivable is arrived at an amount equal to, that receivable is arrived at an amount equal to net investment in the lease. That receivable is arrived at an amount equal to net investment in the lease. So, what is that net investment in the lease, sir? What is that net investment in the lease? That net investment in the lease formula is given below. Net investment in the lease is the gross investment in the lease less, that is minus unearned finance income. Net investment in lease equal to gross investment minus unearned finance income. Then what about gross investment in lease? Gross investment in lease for lessor means aggregate of MLP. Add all the lease payments. Add all the lease payments plus guaranteed residual value plus any unguaranteed residual value plus all aggregate of MLP. MLP means it's both it's both lease payment plus guaranteed residual value plus also unguaranteed residual value. That is what I discussed. Okay, that is the difference. As I said, that is the difference between lessee and lessor books. So, what is the next thing? Unearned finance income is the difference between gross investment minus present value of MLP and RV at implicit interest rate. So this is the formula you should remember. Again, I will explain while working on the problem. I will explain what is this formula, how to arrive all those things. But this is the standard formula. Expected residual value. Someone is asking, expected residual value include unguaranteed residual value. Yes, that's what expected residual value means. Total residual value. Total residual value means it includes two parts. One is guaranteed residual value and another one is unguaranteed residual value. While solving that, we will discuss. While solving the problem that we will discuss. So I will write the formula here for your better understanding. So I am in the books of lessor. In case of finance lease. In case of finance lease, okay. So what I should do? How it is accounted? It is treated as a receivable in balance sheet. That is the initial recognition. Initial recognition is receivable in balance sheet. How this receivable is arrived? This is arrived by calculating net investment in lease. How this net investment in lease is arrived? Net investment in lease equal to gross investment minus what? Gross investment minus unearned finance income. Unearned finance income. Okay? Unearned finance income. So how this gross investment is arrived? Gross investment equal to aggregate MLP plus guaranteed residual value plus unguaranteed residual value. Okay, this is how it is arrived. Then unearned finance income. Unearned finance income is nothing but present value of gross investment. That I will explain. Present value of gross investment. Present value of gross investment means we have to discount. This thing we have to discount. This thing we have to discount for present value. Okay. So with this understanding we can solve this problem. With this understanding we can solve the problem actually. With this understanding we can solve the problem. So go to the problems which we discussed in previous class. So previous class we discussed books of lessee we discussed actually. We will continue with the books of lessor. We will continue with the books of lessor. Just to go through the problem, just to go through the question. Just to go through the question first. Just to go through the question. Illustration 23, just to go through the question alone. Yourself please go through the question first. I'll give you 1 minute time. Please go through the question. Please go through the question. Formula. Lease. Gross investment in lease is what actually? Aggregate of MLP how much? Aggregate of MLP how much? Put your answer. Put your answer in the chat box. Message your answer in the chat box. What is the aggregate of MLP? Aggregate of MLP plus guaranteed residual value plus unguaranteed residual value. What is the total answer? Don't look at the input material answer. Just look at the question and tell me. Aggregate of MLP plus gross residual value plus unguaranteed residual value total is how much? As per the question. Share your message. Please share your message. What is the total answer? What is the total answer? 22 lakhs from Darshini. What about others? What is your answer? Tell me. What is your answer? 22 lakhs. 22 lakhs from Kavita. What about others? And maybe material they would have typed wrongly also. There may be error in the answer also. You should type your own answer. What is the answer? What is your answer? Again, Preeti 22 lakhs, Kirti 22 lakhs. It is 22 lakhs only. How aggregate of MLP is what actually? Per annum, what is the lease rent? 5 lakh. 5 lakh is the lease rent per annum. 5 lakhs into how many years? 4 years. Equal to 20 lakhs. Plus guaranteed residual value. Plus the guaranteed residual value given in the question. 1 lakh. Plus unguaranteed residual value. Unguaranteed residual value directly not given in the question. We have to identify. That is difference between expected residual value minus guaranteed residual value. Expected residual value is how much? Expected residual value is how much? Expected residual value is 2 lakh. Correct? Minus guaranteed residual value already is available in the question 1 lakh. Equal to balance 1 lakh. Is unguaranteed residual value. Expected means total. Expected means total residual value expected. Out of which 1 lakh is guaranteed by lessor. Sorry, 1 lakh is guaranteed by lessee. Balance 1 lakh is unguaranteed, means it is guaranteed by third party, not by the lessee. So that also I have to include here. So 20 lakhs plus 1 lakh plus 1 lakh equal to 22 lakhs is my gross investment in lease. Is my gross investment in lease. So gross investment in lease is identified. Gross investment in lease is identified 22 lakhs. Then what? Unearned finance income. Unearned finance income means present value of gross investment. What is gross investment? 22 lakhs. Present value of 22 lakhs is how much? Present value we have to identify. Present value means what is the today value for the 22 lakhs? Because 22 lakhs we are not going to receive today itself. First year something, second year something, third year something, fourth year something. After adding all this figure, you are getting 22 lakhs. So if I discount for the present value, what figure I will get it? That is present value of gross investment. How to identify that? How to identify that? How to identify that? So here 1, 2, 3, 4. And lease payments received is first year 5 lakh, second year 5 lakh, third year 5 lakh, fourth year 5 lakh plus 1 lakh plus again 1 lakh, totally 7 lakh. Why? Because guaranteed residual value and unguaranteed residual value, both we have to include, total 7 lakh. That is the difference between accounting treatment in the books of lessee versus lessor. Both will not be same, because in the books of lessee we are considering only guaranteed residual value, but in the books of lessor we are considering both guaranteed and unguaranteed together. So discount factor, then present value. Discount factor how much? What is the rate of interest? I think the same 14.97 percentage. 14.97 percentage, yes. So what to do? 14.97, how to discount? In previous class I said that. So 14.97 percentage means 14.97 divided by 100 equal to 0.1497 plus 1. Okay. So what I should do? 1 divided by 1.1497. How much? 1 divided by 1.1497 whole square. Third year, 1 divided by 1.1497 whole cube. Fourth year, 1 divided by 1.1497 whole quadruplicate. Okay. So what is the answer? What is the discount factor for the first year? 1 divided by 1.1497 how much? 1 divided by 1.1497. 1 divided by 1.1497 how much? Just take your calculator. All of you please take your calculator and do it. Don't use the mobile for calculation. Take your calculator and work out. What is the thing? 1 divided by 1.1497 equal to how much? 0.8698. All of you understood this workings actually? All of you understood this workings? For first year 0.8698, for second year 0.7565, for third year 0.6580, for fourth year 0.5724. All of you understood how this arrived, this discount factor? Discount factor how arrived? All of you understood? Please reply your views. 0.8698. Yes, sir, understood. So shall I proceed further? So now I have to identify the present value. Now I have to identify the present value. Present value is nothing but actual payment into discount factor. Actual payment into discount factor, 5 lakh into 0.8698 equal to something I'm getting. What is that something? 4 lakh 34, 900. Again, next thing, 5 lakh into 0.7565 is how much? 3 lakh 78250, and third year 3 lakh 29,000, fourth year 4 lakh 00680. How? 7 lakh into 0.5724. That we have to identify. So if I add all the figures, how much I am getting? 1542 830. This is called present value of gross investment. This is called present value of gross investment. So what I should do? Unearned finance income is what actually? Unearned finance income equal to gross investment minus present value of gross investment. Unearned finance income equal to gross investment minus present value of gross investment. My gross investment is 22 lakhs minus present value of gross investment 15.42830 equal to unearned finance income is nothing but the interest portion. 657 170. 657 170. Okay. So what I should do? What is the next step? Net investment in lease. Net investment in lease equal to gross investment in lease minus unearned finance income. Again same thing. 22 lakhs minus 6.57170 lakhs equal to 15 lakhs 42,830. This is my answer. 15 lakh 42,832 is my answer. What is the meaning? Net investment in lease nothing but I'm going to account this as a receivables in balance sheet. As a opening balance, I'm going to account this as a receivables in balance sheet in books of lessor. Okay. Up to this understood? Up to this all of you understood? Up to 15 lakh 42,830 all of you understood? Shall I proceed further? Yes sir. Preeti, yes sir, Preeti. What about others? Ravina, yes. Swati, yes. Darshini. Okay. What is the next step? I have to account this in the receivables in my balance sheet. In my balance sheet, opening balance 1542 830. Every year I have to do two things. Every year I am receiving 5 lakh rupees. Every year I am receiving 5 lakh rupees from my lessee. How to account that 5 lakh? That is what we are going to discuss now. How to account that 5 lakh? In P&L I have to account that 5 lakh as an income. Not full 5 lakh I need not to account as an income. Out of 5 lakh, whatever the interest portion that should be accounted as an income, balance should be reduced from my receivables account. That is what I am going to work out now. So receivables, opening receivables, year 1, 14 lakh 52 14 lakh to 42. Okay. 14 lakh, sorry, 15 lakh 42. 15 lakh 42. What is the opening balance? 15 lakh 42. 830 is my opening balance. Receivables. So every year I have to do two things. One is minimum lease payment received. Minimum lease payment received should be categorized as interest portion, interest received portion. Then principal recovery. Principal recovery. Then closing receivables. Closing receivables. So first one is year, second one is opening receivable, third one is minimum lease payment received, fourth one is interest received portion, fifth one is principal recovery portion, balance is closing receivables. So minimum lease payment is 5 lakh. First year I received. So what I should do? 15 lakh 42,830. 15 lakh 42,830 into 15 lakh 42,830 into 14.97 percentage is how much? 15 lakh 42,830 into 14.97 percentage is how much? 14.97 percentage is how much? It's 2,30,000. 962. Correct? 962 or 961, everything is fine. So difference is, I'll go to as per input material 2690. Difference 269038. What is the thing? This principal recovery is nothing but I have to reduce from my receivable amount. Receivable amount minus principal recovery. Receivable amount minus principal recovery equal to closing receivables. Receivable amount minus principal recovery equal to closing receivables. How much it is actually? How much it is? 1542,830 is nothing but 1273,792. Second year again I am doing 1273,792 is my opening balance. Again MLP 5 lakh. Again MLP 5 lakh. So 12,73,792 into 14.97 percentage. 12,73,792 into 14.97 percentage. How much? 12,73,792 into 14.97 percentage. How much? It's around 190,687. Okay. So 12,73,792 into 14.97 percentage is 190,687. So 190,687. Balance is my principal recovery. How I arrived at the principal recovery? 5 lakh minus 5 lakh is my total payment. 5 lakh is my total payment, out of which interest portion received is 1,90,687, and the balance is my principal recovery. Balance is my principal recovery. How much? 309313. Then what about closing balance? What about closing balance? Closing balance is 964,479. So like this third year I have to do it. Again, opening balance 964,479. Total MLP received is 5 lakh. 964,479 into 14.97 percentage. 964,479 into 14.97 percentage is equal to how much? 144,383. 144,383. So my total MLP paid is received is 5 lakh, out of which the interest received is 144,383. Balance is my principal recovery. Balance is my principal recovery. That is 355 617. Then what about closing balance? How I have to arrive at the closing balance? Opening receivables minus principal recovery. Opening receivables minus principal recovery equal to closing balance. How much it is? 608862. 608862. That is my closing balance. That will be the opening balance also. 608862 is the opening balance for 4th year. 5 lakh is my interest. Sorry, 5 lakh is my 5 lakh plus 1 lakh plus 1 lakh. Total is 7 lakh. 7 lakh is my MLP. 7 lakh is my MLP for 4th year. So 7 lakh is my total MLP. So 6 lakh 8,862 into 14.97%. 6 lakh 8,862 into 14.97%. 14.97% equal to how much? 91,147. 91,147. So balance how much? Balance how much? 6 lakh. Balance how much? 7 lakh minus 7 lakh minus 91,147 equal to 60,863. Okay. So my closing balance will be 0. Why? Because 60,862 minus this thing, 1 rupee difference, ignore, you can make it 0. So my opening balance receivable minus principal recovery during the year equal to closing balance 0. Okay. So what I recommend is, take your workbook, take your notebook, and I'll give you 10 minutes time. I'll give you 10 minutes time. Sorry, not 10 minutes, only 5 minutes. I'll give you only 5 minutes time. You just complete this problem. 62 equal to my principal recovery. Total MLP, how much is interest income, how much is my principal recovery? That 90,687. That is my, it is my principal recovery. 269038 is my principal recovery. Shall I proceed further? Okay, I will move to the next problem then. All of you completed, I hope all of you completed. I'll move to the next problem. So illustration 25, please go through the question. Please go through the question. Let's go through the question. Please go through the question. So by reading the question, you should able to guess. You should able to guess whether it is a finance lease or operating lease. By reading the question itself, you should able to guess whether it is a finance lease or operating lease. But the question is, calculate the value of lease liability. Value of lease liability means in question itself they said it is a finance lease, because in finance lease only we have to calculate the lease liability and assets in the books of lessee. Okay, so Alpha Limited has taken machinery on lease from Beta Limited. Calculate the value of lease liability from the following information. That is the question. In Alpha Limited has taken something from Beta Limited. Alpha is lessee and Beta is the lessor, and they said calculate value of lease liability. That means calculate value of lease liability in Alpha Limited. That means it is a finance lease. But still we can cross check. By reading the question. What is the first thing? Lease term is given 4 years, and life of the asset is not given. And what else is given? Fair value is given. 20 lakhs is the fair value. Lease rent is how much? 6,25,000 per annum for 4 years. Which means how much is coming? 6 lakhs into 4, 24 lakhs plus 25,000 into 4, 1 lakh. So 24 lakhs plus 1 equal to 25 lakhs. 25 lakhs is the lease rent received from the lessee. From the lessee, lease rent is received 25 lakhs plus guaranteed residual value also you have to take it. 25 lakhs plus 3 lakh 75,000 is equal to 28 lakh 75,000. Fair value of the asset is 20 lakhs, but I am going to receive 28 lakh 75,000 from the lessee throughout the lease period. Even if I discount this figure to 15% discount factor, now also I will get around 20 lakhs definitely. So it is a finance lease. By just going through the numbers, you can say it is a finance lease. One more thing is, lessee is giving guarantee to the lessor that after 4 years he is ready to buy that for that asset for some value, that is guaranteed residual value. Meaning residual value when we will normally calculate at the end of the useful life of the asset. Which means life of the asset is also 4 years. That is why he is offering guaranteed residual value, because there is no significant value. Okay. So with this understanding, assuming this is a finance lease, we have to work out the value of lease liability. Why we are having to work out the value of lease liability? In the books of finance lease, just to go through this point. What is the thing? In the books of finance lease, the lessee should recognize assets given under finance lease in the balance sheet as an asset and liability. Asset and liability. How to arrive at the figure? Amount will be lower of fair value of leased assets and present value of MLP. That should be your that should be your liability, that should be your asset in the books of lessee. We have to identify two things. One is fair value, which is already given in the question, that is 20 lakhs. Another one is present value of MLP. That is what we have to identify. Because present value of MLP is not given. Only gross thing is given. Discounted thing we have to identify. How to identify that? How to identify that? So here 1, 2, 3, 4. MLP in the books of lessee, only guaranteed thing only we have to take it. In question also they gave only guaranteed residual value, not unguaranteed residual value. If unguaranteed residual value is given in the books of lessee, we need not to consider. So MLP is how much? 6,25,000. 6,25,000. 6,25,000 plus guaranteed residual value 3,75,000. Unguaranteed residual value should not take it. We should not take unguaranteed residual value in the books of lessee. We are calculating in the books of lessee only. So discount factor is given directly in the question. That is 15%, and the factor is also given. 1 divided by 1.15 equal to 0.8696. 1 divided by 1.15 whole square equal to 0.761. 1 divided by 1.15 whole cube is equal to 0.6575. 1 divided by 1.15 whole quadruplicate. That is 0.5718. Present value is nothing but MLP into discount factor. So 6,25,000 into 0.869, 696 equal to how much? 5,43,000. 5,43,500. 6,25,000 into 0.7561 equal to 4,72,653. 563, not 653, 563. 6,25,000 into 0.6575 equal to 4,10,937. 7,50,000, yes, 7,50,000. Why 7,50,000? Guaranteed residual value is how much? There is a error in the guaranteed residual value. Guaranteed residual value, I think there is an error in the question. Guaranteed residual value, I think there is an error in the question. It is not 3,75,000. You will correct it as correct. How much is given? Here 7,50,000. 7,50,000 means it is 1,25,000. You make it 1,25,000. You make it 1,25,000. Forget about 3,75,000. Guaranteed residual value, you make it 1,25,000. There is a error in the question. Okay, I am making this guaranteed residual value as 1,25,000. So 6,25,000 plus 1,25,000 equal to 7,50,000. 7,50,000 into 0.5718. 0.5718 equal to 428,850. 428,850. So if I add all these present value things, how much I am getting? 18,55,850. I am getting 18,55,850. So in the books of lessee, finance lease, in case of finance lease, lower of fair value and present value of MLP. Present value of fair value is 20 lakhs and present value of MLP is 18,55,850. So fair value of leased, the value of leased liabilities lower is this one, 18,55,850. So answer is value of leased liability equal to 18,55,850. Okay, understood? Any doubt in this problem? Understood or not understood? Just put your message. Please put your message. Understood? All of you present over there. Share your messages, please. Yes, sir. Understood. Please complete this problem. Take your notebook and complete. Within 5 minutes, please try to complete this problem. Within 5 minutes, please try to complete this problem. Please take